start recording it right now.
Oh, okay. All right, cool. So we'll start. And so that's what I'm saying. I'm just going to move through it really, really quickly just to make sure that I get all of her questions answered. But to answer the second question, which would be higher time frame confirmation, more or less for daily swing trading and things like that, you're of course never going to want to look on a lower time frame. Lowest meaning probably 4 hour, and 4 hours is going to be, again, the bottom, the base of what you should be looking at daily, even weekly, and looking at even sometimes monthly time frames and things like that is going to be where you're going to start. So if you guys just want to take notice of what I do, these orange lines here were personally identified by me, and they're monthly levels. So if no matter what you're trying to do, it doesn't even matter if you're going after trend information or whatever type of analysis that you're doing, you still have to identify the higher time frame levels. And so you can just see that these are just a few that I pointed out. But one thing with me in particular that I do, I don't know if you guys will notice, but all of my numbers are even. 101 at the top, 89, which is the top one, 85, 500, which is this one right here. And then, 56, just to, again, show some examples. And so, in this particular example, this is a ranging market, but this is like all the way back until 1994, right? So if we were to kind of get a little bit more realistic and say, if we're looking on the monthly time frame here, okay, we could probably come back to 2014. This is a good enough amount of information to look at. We can, of course, see that this has been trending down, but of course has been hitting something, right? So no matter, even if you are going for a shorter time frame sell, this doesn't really apply to scalping, but intraday trading, or even daily swing, daily swing trading, and it's all still relevant because you want to understand the higher time frame analysis no matter what. For me personally, I study the same three pairs. I stick to AUD/USD, AUD/JPY, and USD/JPY. They're correlated, and these are the only three that I pay attention to. But as an educator, I do have to look at other pairs and other charts and things. But when I'm trading, I focus on these three. So I don't necessarily ever have to come out to the monthly or even necessarily the daily, because I already know what's going on. You see what I'm saying? So it's just about studying them as well, like picking and sticking to them as well as you can. So then, of course, we're gonna go ahead and hop down to the daily, and then what you'll notice is that, okay, so this is the daily, right? All right, and let's check out the 4 hour. Okay, neato. All right, there is the hourly. There's the 30-minute. Do you notice that the trend of the market, and no matter what, what perspective that you're looking at it, the trend will start to move. So like what I'm trying to say here is that even though we are on that trend, right, on a daily time frame, which is upwards, the closer that you get to it, the more you'll magnify into this little downtrend, which is just honestly just a correction of this market right now. But on a smaller time frame, such as like the 30-minute, you'll see that it looks like it's the only thing that's going on. You see what I'm saying? Like, you want to understand that the smaller time frames aren't going to hold as much what I call strength in terms of analysis. The higher the time frame, write that down. The higher the time frame, the stronger the analysis is. And again, that doesn't just apply to swing trading. So that's, of course, how you want to identify like the higher time frame trend. You want to understand, okay, if it's hitting the level that it's only hit right here twice, and it's made its second tap, and all it's done is create lower highs, this market is trending down at the moment. Yeah, now granted, yes, it is making a little bit of a higher high right here. As we can see, it's been breaking out of the structure a little bit. But when you're identifying that, we also know, remember, because in this example, we know that this is really, really respecting, even on a monthly time frame, we can see that this is where it's tapped twice and has, already started to reject off of. And by the way, whenever price confirms at an area, and what I mean by confirm is like this, for example, where you have 2 monthly candlesticks or hourly or 15-minute or whatever candlestick you want to talk about, confirms at a level such as 89. That just means right there, and these are monthly, so that's, give or take 50 trading days of information that could not close. That's relevant. It could not surpass 89 for 2 months straight, and then look at what happened afterwards. Look at this consistent, massive drop to the downside, simply because you could have identified that off of that level. So you'll learn that more as you come into my sessions on IML TV. This is the way I trade. This is the way I analyze. So you'll always be able to find me in there if you have more questions about it. But now that we've kind of discussed looking for your higher time frame and looking for, where you ideally want to be jumping into the market just based off what is happening in history, of course, when you get into entry points, and entry points are really, really interesting. So I'm going to go ahead and jump down to the hour for this, to make it a little bit easier. I do most of my personal analysis off of the hour, and I like the hour, and you might ask why, and it's honestly just because nobody in the world says how many 30 minutes before you go into work or how many 4 hours before you go into work. We say how many hours do you have before, how many hours do you get to sleep, how many hours you work per day. The whole world revolves around hours, days, weeks, and months. So, and personally, in my opinion, I think that those hold a lot of value. And yes, for my entries though, however, that's where I jump into smaller time frames, and that's where it's going to get a little tricky. So in your section, let me give you, on your notes, I can't say that, the hour is going to be the best for you. The hour might be it. Like if you're doing what I'm about to show you, you could be on the daily and then jumping down to the hourly to try to find your position. But since we're on the hourly, I'm going to be jumping to the 15-minute to find my position. You see what I mean? No matter where you do your analysis at, no matter what time frame, except for obviously like the 5-minute and the 1-minute, because scalping has completely different rules. You identify what you're doing. So like right here, for an example, is this going to be the total retracement for AUDJPY right here? Is it about to respect this price, 86,500? Now we've already seen just off of the bait, already what price has been confirming is that there is a lot of candle wicks right here that are confirming to us that a price can't be broken. It hasn't necessarily touched 86,500 yet, but if it's 5 pips off from it, it's still respecting it one way or the other. When you see that, especially after this particular move, now all of this right here is what happened today. So don't really worry about like these massive candlesticks. It's just the information we have right now. If 86,500, based off of anything else that you were looking at, such as, that this market has been trending down on a smaller time frame, it has been ranging right here again on a smaller time frame. All of these little yellow circles are when I go live on the Trade House session. This is when we discuss things together. As you can see, most of the time we have been spent right here between the price levels 87 and 86, right? Just really simple. All price has been doing is essentially just bouncing up and down between 86 and 87 being 100 pips, just boom, 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 as we can see, right? But we're at 86,500, and look, it's even tapping it as we speak. So if, and again, just for the sake of examples, if this was going to be a good confirmation for entry, some of the things that go off on my confirmation list is number one, trend. And it's kind of unfair because I know this pair, AUDJPY, has been trending down just a little bit, not nothing crazy right now, but 86,500 has been a price, as we can see, that has been, played around at for a really, really long time. I've had this same level identified for a while, but just again, for the sake of example, we've identified price. I can see my 200 moving average, that white line right there. I like that it's made a 50% correction or 50% retracement of this entire move. You can see that it's pretty much it's halfway. And that's typically what ends up happening. Again, I'm just running through confirmations of what I see to get to y'all's question. Now we're looking for entries, right? So this is everything I've done on the hour because I do most of my analysis on the hour. So now what am I going to do? I notice here that I have 24 minutes and 17 seconds left on the hourly time frame. Now, the thing I want you guys to understand is that I normally do not do entries in the middle of hours. Some of the best times to get into trades is literally like either in the last minute or the first minute of the next hour. And again, I don't want to like dive too far into that because it'll we'd have to like start a whole other session about the timing and how everything works. But again, just for the sake of simplicity, whatever's happening right now in the market, like on the particular candlestick that is open, in this example, we can see that that is a very, very bullish candle. Just a little bit ago, you guys saw that it was surpassed it, right? But this candlestick is not relevant until we get to about, the last 5 minutes or so. Because as I'm sure you guys, if you guys have been trading for a little while, you might see that a candle for the first 45 minutes of an hour can be bearish, and then in the last 15 minutes it completely just turns around and then it ends up being a bullish candle. And so that's why I say again, you want to be paying attention for like the close and the starts of the hours, because that's what the actual information is going to be, versus how they can play with your head a little bit by moving candlesticks up and down in the middle of the hours. You see, now that doesn't always apply, but most of the time it does. So now it says now we have 22 minutes and 37 seconds left of this hour. We're just going to assume that 20 minutes of that is gone. And so we are sitting at 2 minutes left. When that happens and I'm looking for my sell, that means that I'm going to jump down to the 15-minute here, and I'm like, okay, first of all, what has to happen is that it's got to respect 86,500 off the bat. If that closes above 86,500, it is no longer confirmed for a sell. Okay? If it breaks and surpasses a price level, you cannot be looking for that position. Now, granted, yeah, you could. It could absolutely just come back. Like look at this little example right here. You still could have been looking for the sell, but in fact, it did close above on the 15-minute and started to drop. Yeah, you could have taken the sell right there and tried to grab like your best entry, but there was no absolute guarantee that this thing was going to bounce right here and continue to move up, for example. So you could have, if you would have taken a sell based off of like that little bit of information, you could have been hurt in that aspect of it was no longer confirmed for a sell because it surpassed the price level that you were trying to get at. So again, I always wait. This is the last, no wait. We have one more 15-minute candlestick coming up and in this hour before we're going to have the close of the next hour. So hopefully you can kind of see what I'm doing here. And I don't think I've seen the chat. Okay. I just wanted to make sure that everybody, I'm going to ask, but hopefully you're kind of seeing here, time is important. Okay. The actual physical time of getting into trades is important. Yes, granted, you can grab certain like better positions maybe in the 32nd minute of an hour. I'm not saying that what I'm talking about is like always 100% going to be the case, but generally speaking, it is. So timing, looking at, okay, so if you're analyzing on the hour, go to the 15-minute. What 15-minute candlestick are you on within that hour? I just like as I said a second ago, there's 5 minutes left on this 15-minute candlestick, which is the third of this hour. So the last 15-minute candlestick is going to really start to present the information that we would like to see. And then I go back to my hourly analysis here, and I'm like, okay, I still am 100% with this position that I would like to see. 86,500 is looking really, really nice. And if we see a confirmation there, we could be looking for that trade. Now, coming back to even the harmonic scanner also gives you good entry points as well. As you guys well know, the entry points, typically there's like an entry zone, like a max and a minimum to enter in. I don't think it does it on the 15-minute ones though. Yeah, there it is. So, sometimes you'll get a zone like this. Typically, when I get those zones, I look for the prices that are really relevant within that zone. And the first one that pops off into my head is 1.7000 on like the euro versus the New Zealand dollar, or 1.69000 or 1.68000. You see what I'm saying? I do that because I'm not so worried about whatever, like 86,559. It's not as important as 86,500. That comes down to the price structure of the market. But again, to try to answer your questions on making sure that your entries are on point. Whenever I identify 86,500, it's not that I'm necessarily waiting to jump in 18 minutes, because we have 18 minutes left in this hour. I've learned, and what you guys will have to learn as well, is that entry points come down to patience. Your ability to just wait and wait and wait and then not be in the fear of quote unquote missing out of trades is critical. I always try to tell people, let the formation form. If you miss the trade, what's the worst that can happen? You missed one opportunity. Well, in the world of trading, there's thousands of opportunities. So it's not about your ability or your inability to miss a trade. It's just, don't feel like you're pressured to get in. And if you are trading that way, don't, because it does not work. I assure you. So even if you wanted to wait, okay, so like this hour right now, look, you can see that it's already respecting off, and I'm glad that it's doing that. You can see currently right now it's already starting to kind of reject off of 86,500. It's 6 pips away from it currently. So let's just say that this candlestick's going to come down to here and it's going to close right there. Just bear with me for the sake of example that this candle is going to go bearish. That means that sell is on. That's a high probability sell, right? Just based off everything that we've been talking about. If that were to happen, I'm not jumping in on the sell at the start of the next hour. That's when I really get down to like the 15-minute, maybe even the 5-minute, and get in. If I'm getting in on a sell, I'm not getting in on a bearish 15-minute candlestick. I'm getting in on a bullish 15-minute candlestick. So you want the market to be pushing up back towards that price. Maybe that doesn't happen, but a lot of the times it will. And so that's what I'm saying, where the patience really starts to just come in. You'll start to just see, even like, again, if you're doing your analysis on the hour, you jump down to the 15 or the 5-minute. If you were doing this on the daily, you'd be jumping down to the hour or the 4-hour, things like that. And then you would be taking a look, and all you're doing is just waiting. And I promise you, it's the people that wait the longest for the best entries are the ones that don't have a lot of drawdown immediately, because you're not jumping the gun, because there is no reason to. Again, you have to understand the worst thing that can happen is that you miss the trade. But honestly, if you really want to get upset over that, you know how many trade opportunities we're missing right now in this very moment? I mean, should we be mad about those too? You see what I'm saying? So don't hold that mentality of, I have to do this, I have to do that, and I have to be able to contend with the way things are going on. Look. So this is the end of this 15-minute candlestick, and it's surpassing it at the moment. You see what I'm saying? It's just a patience game. When you identify on your charts, because I still do believe that people have to pick their specific charts. When you guys are finding it, and then you're just waiting, all you're doing is you're just chilling at this point. You're waiting for this to tell you give it exactly what you want. And so what I was saying, like if this candlestick is going to immediately come down here and close, for example, and then the next hour opens up kind of like right here, what I was in my example. Again, I'm not getting in on a candlestick that's pointing down, because that's how you hold drawdown, or that's how you can theoretically get into an awkward position, because if it's a bearish candlestick, it might go bullish. Maybe it doesn't, but there's a lot of times where the candlestick can turn around and go into a different direction, especially if you jump the gun. That's why I say, if anything, if it moved down here, you want to be pushing up as high as you can. This is where pending orders come in as well. If this respects and it moved down 10, 15 pips away from 86,500, it was down here in like the 86,400s, for example, why not have a sell limit at 86,500? You still believe that it's going to be trending down, and you have your risk level identified and your take profit identified and all of those things. It's still an excellent trade. And if it were to activate and then stop you out, that comes down to, of course, risk to reward ratio, identifying what you're willing to gain, what you're willing to lose prior to actually doing this about entries. And this is the next thing that I can say, and that I can pretty much wrap it up, because there's not really, well, there is, but not too much more to explain for you guys to really just get a grasp of that simple concept. And this is the thing about entries that I don't think a lot of people hear. And I want you to be ready, but I want you guys to see me. I don't know if you can see me when this is on, but I just took it off. I want you guys to hear me when I say this. When you're trading, if you guys are, number one, if you guys are taking trades and staring at blue or red numbers, no matter what it is, you're doing it wrong. You can't be trading that way at all. But the other thing that I would, how to help combat that idea about babysitting trades and being emotionally attached, is that spend about 10 minutes prior to actually getting into the market. I mean, if you guys are going to decide to sit down right now and trade, instead of just going straight to a chart, spend 10 minutes. I have X amount in my account. I want X amount of growth, whatever the number is. It doesn't matter. Let's just say you want 5% growth in a day. Just throw a number up, and that's the number that you need to remain consistent with. So if it was 5%, for example, and you wanted, and if you wanted, again, a 5% gain, the max you can lose is 2.5% before your risk to reward ratio is off. Now, that's the first thing that you have to check. And remember, this comes down to entries, because these aren't the things that you want to be thinking about when you're looking for your entries in the market. You should not be worried about what your lot size is and what your stop loss is and what your take profit is. That's the stuff that you need to be worried about prior to, meaning that when you get on the market, that means that all you're doing, because you're going to, if you do that, like I said, if you spend that 10 minutes, you'll find out your lot sizes, and then you'll find out exactly what your stop loss pip amount is and what your take profit pip amount is. If you spent that time doing that before you look at AUD USD or AUD JPY or whatever, that means that all you're doing is trying to plug in your trades. You understand what I'm saying? It's an investment opportunity. That means that when you get into a trade, you're not going to stare at your phone, because you've already pre-identified what you were willing to lose and what you were willing to gain, meaning that your entries are going to be a lot better. You're not, if you guys have ever taken trades and your lot size is composed of your emotional level of your belief on whichever way you think the market is going, like you really, really think that this is going to sell, and then you go 8 times harder on your lot size because you really, really think that it's going to drop, I can promise you right now that you're going to lose your money that way. I've had to learn that the hard way. It comes down to your probabilities and having a higher probability trade of success. But do you guys understand that? Can you understand that if you identify what you're willing to lose prior to even entering the trade, You're not going to stare at your phone. So your entries become better, your exits become better, your trading simply becomes better because you're managing yourself versus, I mean, I remember when I used to do it, like I would be looking at the market and be like, all right, let's just take the example AUDJPY that I did. 7 months ago, if I had identified that same opportunity, I would be running around in the room asking what should my lot size be. I would be asking other people, guys, y'all really think that that's going to drop too? Like, should I standard? Should I go in? Like, should I risk all my account? Like, can you understand the sense of professionalism that's not there in that type of mentality? You have to be able to control your outcomes. So, guys, I hope that you took notes over that. We don't have a lot of time. But your entries will improve based off of your composure and your approach. Not even necessarily what's on the charts, but you yourself manage your trades, meaning, again, you take the numbers on your piece of paper or your spreadsheet or whatever you have, and then put those into the market. That's where you're going to find your best success because, again, you're not going to babysit. You're not going to worry about it. Well, you shouldn't, because if you identify what you're willing to lose, you should not be tripping out about the trades being a negative, because I can tell you right now, no professional trader ever looks at the trades that they're in, because they have thresholds on top and on bottom, and it's going to hit one regardless. It doesn't matter. Like, once you're in the trade, there's nothing you can do except close it out in profit or in loss. That's literally all you can do. So manage yourself, manage your positions by, by managing your approach. So SJ, I talked too much. And guys, again, I wanted to apologize, for not being here on time. I will definitely be on time on the next one that we have, next week as well. But I will go ahead and let SJ wrap this up. So SJ, it's all you, girl.
Thank you so much. Hope you guys learned a lot from that. The feedback I've gotten from it obviously is all good again, as usual, like the calls are with you. I know you're going through a really tough time, so I do appreciate you getting on these calls and waking up. So that means a lot to me and everyone here that's also on the call as well. So do appreciate you waking up, staying up, or having power naps, whatever it is you got to do to get up at 5 o'clock.
It's all good. This, I promise, this helps me get away from that, if that makes any sense. So it helps. It helps. I like to be focused on this. You know what I mean? So I love it.
Well, I appreciate it, as we all do.
Yes.
And we will be back here 8 p.m. next Tuesday. So this is a regular thing that Mike does for us. He has previously just done it for my organization, but I figured Mike's too good to keep to myself. I got to share him. So, thought I would open him up to everyone.
But guys, I really appreciated all you guys taking the time. Again, sorry for being late. It won't happen again.
It's all good. It's all good. I really appreciate you. Guys, if you have anything in particular that, maybe you can't make IML TV sessions because you've got work and things like that, and maybe on the other calls, there's just still a few things that you're not picking up, get these questions and things to me so that I can get them to Mike. So when we do these calls, you are finding out things you're struggling with. Question is a dumb question. Doesn't matter if you are a day old, a year old. I still learned something from Mike, and I've been for 2 years. So shoot me a question, shoot me topics you want to go
Absolutely.
over. Mike doesn't have to do these. These are things he does independently out of his own job with IML TV. So the fact that he jumps on these calls, it's for your benefit. All right. So get the questions, get the topics, get whatever you want. Let's get your questions answered. If you want some one-on-one time, let's organize that too. Like, let's just get you making the money that you deserve to be making.
Yep. The education. Let's get it.
Exactly right. Thank you, guys.